We're going to talk about a topic that's I actually love because I didn't know this, and so I love learning about new things. That's what the show's all about. Not only do we teach the people in Long Beach and the surrounding cities about real estate, but we also learn, at least I do. We're going to talk about the difference between direct lenders, brokers, and the big banks.
I love this topic.
You do?
Yes.
When Frank loves a topic,
this is going to get heated.
It could be good.
Because there's some splaining to do here.
There's some
Lucy, you got some splaining to do.
Well, Lucy has some stuff to say. So
this is going to be
It's going to be good.
Elisa
okay,
is
so
Lucy,
we know that we're in a special in this booth. It's common knowledge that we're in a special market right now, and the market really is going to dictate. Really, when you're making that decision of mortgage lenders, you need to be conscious of who you want to do because there's going to be a difference. So we have the big banks, you have direct lenders, and you have mortgage bankers. So let's start with the big banks. One good things, we probably bank with them. We know them. There's some sort of level of trust because we can literally drive down the street and go in and
aren't they being
talk to
occupied
somebody
right now because nobody
right?
trusts them?
Well, then why are so many people going to them?
And
there is a level.
They have their own.
There's a familiarity. There's a familiarity
I think
with
it's a
these
force
big
of
banks.
habit is what it is.
And a
It
familiarity.
goes that marketing machine.
You literally can go down the street. So
Yeah, exactly.
So that's one positive with it. But here's the problem with big banks. You're going to have big bank service. So it's kind of like
no service.
Basically, it's kind of like trying to go shopping at Walmart on Black Friday. It's going to be chaotic. It's going to be hectic. Yeah. Slower communication, slower processing, slower underwriting. And when you're overloaded, what's going to happen? Things tend to fall through the cracks. And this is the industry where things cannot fall through the cracks, especially in this environment. So on the other hand, you also have mortgage brokers. So
can I say one thing about big banks right now? When
keep the rant to 30 seconds.
When the whole mortgage debacle went down, there was a huge national push towards licensing and making sure that loan officers or people that were going to negotiate your loan had licensing both by the federal government and the state. Right?
Yeah.
So, 8 hours of testing every year. It was maybe 40
I just redid
hours
mine
for the first and it costs a lot of money. So somebody who does that now here's the catch: the big banks created that legislation and they exempted themselves from having to be licensed.
And here's the fact of the matter, though. You have
your loan officer does not have.
How does that work?
Yeah.
I'm going to make up parking regulations for Belmont Shore, but I'm going to exempt my automobiles.
It's corporatism. The corporations create the legislation to eliminate the competition. So they basically they make it more difficult for people like us that make a living doing this because that's all we do.
And that's fine by me because you know what? That means, here's the bottom line, 60% of people who are in this industry, in my industry, the lending side, are no longer in it. So they're barriers of entrance, and I'm all for it.
Because the big banks pushed them out.
Right, and that's fine with me because it's less competition, and it means that I'm more qualified. Bottom line, you go into your local bank and you may see, the teller of the month that got promoted to being the home loan specialist. And
don't buy your house from a bank teller.
Anyways, okay, so let's move it on. So now you also have brokers, mortgage brokers. They were really popular in the 2000s when lending was really easy to go. The processing, the loan process, they don't have control over that. Essentially, what they're doing.
They're just middlemen that drive up the price, aren't they?
No, they don't necessarily drop up the price, but the challenge is the
transaction's out of their hands.
There's more people involved in the process.
Right. So what's going to happen is you come to me, I broker, I take your loan, and I am set up with various lenders and direct lenders to shop your loan. And then I send that package, your loan, off to these banks, and now the banks are handling the transaction.
Isn't this a case of too many cooks spoil the broth?
Yes, and that's kind of in today's market.
Well, the problem I saw back then was that some of the brokers I knew, and I knew some real shady brokers, I tell you right now.
Frank disclosure.
But they would put the best face on that buyer and then present it to the money source, so that by the time it got to the money source, it was they took that guy that just woke up in the morning and cleaned the sand out of his eyes and combed his hair and made him look handsome, but ultimately he's a slob, and they presented it as he was
speaking.
Ken Doll, and next thing you know, that bank did the loan to them, and ultimately down the road that person wasn't truly qualified.
Frank, that's called online dating. That's really what that is.
So,
Hey, how do you think I met my
the
wife?
biggest factor here is you want to look at the state of the market. And right now, there's so many guideline changes, there's so many rules that you really want something that could be on top of it. So kind of the middle road between these two things would be a direct lender.
Number three.
Mortgage bank. Yeah.
A mortgage banker.
Mortgage banker.
So it's kind of the best of both worlds. So the best of a broker is that you can shop around, you have various options to you, and you're able to place those loans. Well, direct lender,
And
they
they're
may
licensed.
and they're licensed.
And they actually have more flexibility than the big banks because the banks will have their little box
They have their
set, and if you
structure.
don't fit in, you're just
You're
not
done.
going to go with them.
Now, a direct lender, they may be set up with various banks, Chase, B of A, and correspondence, and so they're able to shop for you to find a good loan. But the key thing for me is that they have the right to to control the transaction. So everything is done in-house, underwriting, processing. Less things are going to fall through the crack, and more importantly, appraisal, which may be another topic on the,
on another day.
On another day, because that's a whole nother topic. But essentially, you have more control and less things are going to fall through the crack with a direct lender, but you still have the benefit of being able to have various products available to you. You're not limited to just one.
Okay, so break it down. You got the three. Which one's best?
Right now in today's market, direct lender is your best option. I actually know some listing agents who won't take, and this is hush hush. I don't even know if it's hush hush, but they won't look at. They won't take offers.
Stop looking at me. You're always looking.
Well, they won't take offers from buyers who are financed through big banks.
Whoa! Time out.
Time out.
I present
for those of you
You
watching.
have to present all of them.
Frank put up the.
But there is.
It's the seller. Well, the seller really. It's their decision, and they do ask when you submit the offers.
Is it from a broker?
At least
it's because they know it's going to take longer.
At least for the REOs, physically, I don't actually scan, fax, or in any way, shape, or form send the bank the actual. We call it RPA. Basically, we'll call it the purchase offer.
Right.
But there's a line item. How much are they offering? What kind of loan do they have?
Right.
Is there is there a lender? Who's things like that, and that's how they kind of determine. They're doing it. They're filtering. Basically,
whether it's legal or not. I know agents who absolutely will not take an offer, and they deal with a lot of investors. Their clients are investors, and they won't take an offer from a big bank because they know it's going to take longer. A refi minimum 60 days.
All right, last word on the subject, Scott.
Last word, if all things being equal is in terms of competency, I think a mortgage bank is going to be your most efficient.
Because everything is handled.
If anybody has more questions, just go ahead and hit us up on Facebook, facebook.com/keeping it real estate on the beach. Leave us a voicemail at 562-888-BEACH. Or maybe on Gmail, keeping it real estate on the beach at gmail.com will help you with that. And also, one of the big supporters of the show is homeownershipuniversity.com. You can get some great information about this topic and much more by going to homeownershipuniversity.com. And if you want to call them 714-538-4404. Because
I'm going to write an article on this.
You should, because it's kind of a crazy subject, and I think that I'm willing to bet that the large portion of our audience, all four of them, basically didn't know that the best of those three choices would be the direct lender.